Hi, welcome back to Westbury 101. I'm Brian Westbury, Chief Economist at First Trust Portfolios. Remember, we want to be the antidote to conventional wisdom. Well, today I want to talk about this balance between the private sector and government, or imbalance, depending on how you look at it. But I want to think about this in terms of what drives an economy to grow. And our position, our models, and what I've talked to you about over the last few years is that the bigger the government gets, by definition, the smaller the private sector is. There's only 100 cents, if you will, in every dollar. If the government spends 25 cents of every dollar and borrows and taxes away those monies to spend, that's only 75 cents left for any private sector entity. So the bigger the government becomes, by definition, the smaller the private sector is. And the government has clearly become lots bigger in the last few years. The amazing thing is that even though the private sector is smaller relative to the economy, it is still extremely productive. And the way I think of things is kind of in a weighing scale. All right, so on one side, on the entrepreneurship side, if you think about it, we have the Bakken oil fields, the Marcellus shale, the unbelievable technology that these drillers have invented in the last decade or so that have allowed us to extract oil and natural gas from the shale. These have been amazing finds, and I believe this technology is going to continue to contribute to growth massively in the years ahead. At the same time, we've invented the cloud and the smartphone, the smart tablet, the iPad, if you will. All of these things are lifting GDP, lifting growth. They're entrepreneurial, they're innovative, they're creative. That's on the positive side. On the negative side, weighing us down, is a massive increase in the size of government, especially in the last decade or so. But what's interesting about this scale way of looking at the world is that we know that the entrepreneurial side is still winning. How do we know? Because the economy has grown. In the last 9 quarters, real GDP, remember that's after taking away inflation, is up 2.5% at an annualized rate. The unemployment rate has come down in the last 12 months from 9.7 to 9. In the next 12 months, it should come down to 8, 8.3, 8.25. And so the bottom line is that we are moving in the right direction and growth is up, but it's much weaker than it would be if government weren't the burden that it has become. Now, lots of supply-siders, or people who have learned the supply-side way of looking at the world, have become very negative about the economy. They just can't see how it could grow because government has become so big and regulations are so high. And let me tell you, I have a lot of sympathy for their view. Government is out of control. It must be cut back. If we ever want to balance our budget again, we have to cut spending from 25% of GDP back down to about 18.5%, maybe 19%. We've talked about that before. But, and this is where I want to shift gears a little bit, I'm becoming much more positive that the pendulum has begun to swing. I also think we've hit a turning point in government spending, and we are now in a virtuous cycle of smaller government, bigger private sector, better growth, more jobs, and what I consider to be a much better economy in the years ahead. So let's take a look at this chart. This is the chart of government spending. It's a 12-month rolling average, if you will, of government spending, and it goes back to 1995. And I want to talk about 3 different periods in this chart. The first is from 1995 to 2000. If you remember then, we had a boom in the stock market, a boom in the economy. The unemployment rate fell to 4%. In the end, government spending during that period only grew 3.4% per year, 3.4. The economy was growing faster than the government was growing, which meant government kept shrinking and the private sector kept growing. That is a virtuous cycle of economic activity. But then we hit a vicious cycle. When George Bush became president, Barack Obama after him, government spending between 2000 and 2009 went up 7.8% at an annualized rate. This was much faster than the economy. Unemployment picked up, the economy slowed down, stock markets had problems, but now in the past 2 years, all of a sudden government spending has slowed down again. Now partly this this is because we're paying back TARP, and we've had some spending reduction, or at least growth in spending reduction. And what's happened is government spending has only grown 1.2% per year in the last 2 years. The economy, however, has grown at a 4.5% rate. That's nominal growth, which means government has begun to shrink as a share of GDP. And what this means is every day this happens, every time the government grows a little less fast than the economy as a whole, the private sector gets bigger. And this happens slowly but surely, and we start this virtuous circle instead of the vicious circle all over again, where literally the private sector gets a little bigger, which creates more growth and creates more jobs, which puts less burden on government. And I believe we have now hit this turning point in the size of our government. What I expect to see over the next few years is a continued reduction in the size and scope of government relative to GDP. Now, a lot of this will depend on the outcomes of the November 2012 elections. The Supreme Court looks like it is going to rule on the constitutionality of Obamacare. All of these things are coming up, but it looks to me as if the pendulum has begun to swing, and that makes me very more optimistic, or much more optimistic, about future economic growth than even I have been in the past. One thing I want to caution you about, and that is that if you allow politics to enter into this analysis, and I know we have to count on elections and the political fortunes of certain candidates, but what I mean is don't allow your politics, your political ideology to enter into this, even though we have not really changed government programs yet, or lowered the bar and the burdens of Dodd-Frank or anything like that. Government spending has begun to turn. And so as an analyst, as an economist, as an investor, that's what we need to focus on, not the little dots and tittles and T-crosses of all the political infighting. We have a super committee today, which is, I think, being way overplayed in terms of its importance. It looks like they're going to move to a sequester, which is only about $100 billion a year. We're going to be told that's the end of the world, but $100 billion a year, slowly but surely, keeps that spending line flat, or possibly even heading down as we move into these next few years. This is great news. The private sector is growing. A virtuous cycle of growth, in my opinion, could begin. The stock market today is cheaper than it's been since the early 1980s, and we all know what that turning point was like for the U.S. economy and equity market. So hang in there. Things are getting better. They're better than they seem to lots of people, and I remain extremely optimistic. Thanks so much for visiting Westbury 101. Remember, we want to be the antidote to conventional wisdom. See you next time.